Hello and welcome to another episode of Bell Financial Group's From the Helm series. I'm Grady Wulff, Senior Market Analyst with Bell Financial Group. Rural Funds Group, ASX ticker code RFF, is Australia's first and only listed agricultural REIT company that covers lots of land of Australia, managing and operating and leasing in the agricultural space, from macadamias to cattle, citrus, all different kinds of land in the agricultural space. Today, I'm thrilled to be joined by Tim Sheridan and James Powell of the company, the COO and General Manager. Gentlemen, thank you so much for joining us today. All the way from Canberra, you've come out to join us.
Our pleasure. Yeah, thank you for having us.
Now, for our investors who may not be aware of the portfolio of Rural Funds Group and what you offer in the market and how you differentiate, can you give us a quick overview of the company and what you're up to these days?
Yeah, okay, so Rural Funds Management, we manage $2.5 billion of Australian agricultural assets. Those agricultural assets are spread across commodities in which Australia has a comparative advantage. So they're sectors that we can compete globally and successfully. So we're in beef, cattle production, macadamia orchards, almond orchards, viticulture, cotton production, and that's about it.
So our listed entity that we manage is the Rural Funds Group.
Yeah.
It has an ASX code RFF,
yeah,
and it has a $2 billion agricultural property portfolio, which is leased predominantly to corporate counterparts.
Yeah.
So it's a $2 billion agricultural REIT, and our strategy is to improve the assets through productivity or higher and better use conversions. And pay a consistent distribution to our investor base.
Yeah, investors, you are known for the income investing that a lot of investors love to see with the dividend policy that you have, which is great. How is the current commodity cycle faring for you? I know macadamias are a big one on your horizon right now. Can you tell us about the fluctuation in prices and what that is doing for your balance sheet and things like that?
Yeah, so starting with macadamias, it's historically traded at about $5.80 per kilo. During COVID, we saw the price decrease to $1.70 per kilo. But since that time, I guess global demand has kept up with the supply, and we've seen that price recover. In our AFFO forecast this year, we're assuming a price of $4.70 per kilo.
Wow.
Last year, we had a price of $4.30 per kilo.
Okay.
So a strong recovery in that. Across the other sectors, beef cattle prices, they've been very volatile over the last 24 months, but we're seeing what are very historical high prices. Driving that is very high beef prices globally. And then the other commodities they're all experiencing quite strong commodity prices.
Absolutely.
And give it, of course, the majority, so 85% of our assets are leased.
Yeah, okay.
Our unit holders, in the majority of instances, aren't directly exposed to the commodity prices. But of course, we like high commodity prices because that's better trading conditions for our lessees. And
also, talking about weighted average lease expiry, you guys have quite a long one compared to the industry, which does fare well for kind of security and weathering the storms of economic cycles. Tell us about your weighted average lease expiry now. Last time I checked, it was about 12.9 years or something, which is absolutely phenomenal.
Yeah, well, it's actually gone up.
Oh.
And so it's now closer to 14 years, as at our last set of results. And what has driven the increase in the WALE is two things in the past few months. First of all, we released a number of assets where they were approaching their lease expiry. We went into leases over a decade in duration for those. And then in addition to that, as many of the existing investors would be aware, we have a significant macadamia development occurring, and that 3,000 hectares of macadamias are leased for 40 years. So those two things have contributed to an increase of our WALE. It's 13.9 years.
Yeah, now with institutional investors increasingly entering the Australian farmland space, does management, or do you guys see driving a higher competition, driving up kind of prices and acquisition prices, or how is that affecting your outlook moving forward?
Yeah, I mean, agricultural land values have increased significantly over the past, call it 5 years. So what we're seeing now is probably a plateauing of agricultural land values. The North American funds are still very active in Australia, but where they're investing into sectors that are very proven, whereas what RFM has been doing, we've been moving into new sectors where there has been limited capital flowing into that. So we're sort of still benefiting from that first mover advantage into some of these sectors like macadamias, because it hasn't been institutionalised like almonds were.
Yeah, given rising demand for sustainable technology, production, how do you guys use precision of irrigation, varietal selection, data-informed farming? How do you use all of this to differentiate yourself in the market right now for investors?
It is very much a focus for, particularly from a precision perspective within our business. Ultimately, what we're seeking to achieve is a low cost of production asset. So whether that's being operated within the listed entity or it's an asset that is leased within the listed entity, we want the outcome to be the same, and that is it can produce a commodity at a low cost and therefore is competitive. Your question is really on point in so much as that quite often it's technological advancements which are driving that improvement in productivity. Just giving you one example within the portfolio that we're really focusing on at the moment is within macadamia production. We have permanent sample plots throughout the orchards that we're leasing, and they're collecting at very high frequency multiple data points so that we're able to optimise the irrigation application as well as the nutrients to improve yields, lower cost of production. That's from a yield perspective. In terms of other technologies also on the macadamia orchards, we've just implemented our first autonomous tractor. So this is a self-driving machine that is able to perform the functions within the orchard that was otherwise doing using labour, and it's doing it to a really high degree of precision. So two really exciting technological developments in just one of the sectors that we have assets.
Yeah, investors are really interested in the AI movement. Obviously, this self-driving tractor kind of plays into that. Are you seeing AI increasingly enhance efficiencies in the space, and are you investing in that?
Where I would say we're investing is in the data capture. And so, of course, you would imagine, as I mentioned before, those orchards are leased for 40 years. So within the lifetime of those orchards, no doubt we'll see the application of that data into some other types of technologies which are really rapidly emerging.
Every day at the moment. Now, how do you see the competitive landscape evolving between domestic superannuation funds, offshore institutional funds, other agri-listed REITs for high-quality agricultural assets? And where does your scale and expertise provide an investing edge for our investors?
Yeah, so we're in all of Australia's key commodities. So we run a team of about 330 staff. Contained within that team, we have a lot of scientists, engineers, PhD students. So what that is doing, it's giving us a competitive edge when we look to develop assets. In terms of the competition, we are Australia's only agricultural REIT, but where we do see competition is not from the Australian super funds, it's from offshore super funds that are investing in Australia. But that being said, Australian agricultural land is still predominantly family owned. So they are our main competitors. But what we can do is we can implement capital and additional skills in order to generate additional returns through land that has been undeveloped.
So now you did mention earlier about the rebound in prices for macadamias and beef recently. How does this play into your long and short term kind of outlook and strategy?
Yeah, so in terms of where the commodity prices will have the most impact, it's in the operated segment of our portfolio, which, as I mentioned, is about 15%. So high commodity prices, all else being equal, will improve the profitability of those small but still meaningful segment of the portfolio. That said, we can't control commodity prices, so we very much focus on controlling yield, which is also very much a key driver for the profitability of those segments.
So managing costs leads to margin expansion. That's exactly what you guys are into.
That's right.
Like you've done it before. Exactly. Now, do you see any emerging agricultural sectors like avocados, citrus, any other areas that are kind of on your radar right now that might be kind of forming the portfolio in the coming years?
So our balance sheet is, our gearing is 38%. We have a target gearing range of 30 to 35%. So we're sitting outside our target range at the moment. We're actually looking to divest a few properties. These are sort of non-core properties where we think their values have run quite hard, and we just don't think we can generate those returns that we've been able to generate going forward just because of where the productivity developments are on with those farms. So we're not looking at investing into any new sectors, But that being said, we're constantly looking into sectors. So a time will come when we are active again. The sectors we're interested in, again, it's sectors where Australia competes globally. Things like avocados, we've avoided those due to the high labour costs. But we like other tree nut crops, so we're doing due diligence on that. We're still very attracted to the Australian cotton industry, and the reason for that is Australia grows some of the highest cotton yields in the world and the best quality. So we compete very globally for that, so we're looking at that sector.
Yeah, absolutely. Now, you did say about the potential divestment of properties. What makes a property ready to divest? Is it lack of productivity? Is it declining whale? Is it what kind of the metrics that you look at? It's
the properties where we have rolled out our productivity developments. So that we've got a couple of cattle properties on the market. They're properties that have had significant capital growth as a consequence of the rises in agricultural land value and the productivity developments that we've done. So because we've got to sell assets, they're great assets, but they're the ones where we see as the least amount of gains going forward. So we're going to sell a few of those.
Yeah. Now, how sensitive is your macadamia portfolio? Because you did mention there's 40-year lease on those. It's kind of the new area of the business that we're seeing growth in. How sensitive is the rental income to nut and shell price of the commodity? And can you explain kind of what that means for our investors?
Yeah, it's not sensitive. All of our leases are largely, they're triple net leases, so we don't take commodity price risk. In commodities such as beef cattle, we do, because they are pure natural resource assets, we try and capture the increase in land valuations. And so we have market rent reviews that will occur every 5 years. And as a consequence of those market rent reviews, the amount of rent we can collect does fluctuate based on the beef price. But we do that because agricultural land values over the last 100 years have increased, and they continue to increase and will continue to increase. But if it's something like a permanent planting, like a macadamia or almond orchard, we just have straight rents that index.
Yeah. So how does RFF decide when to buy into a new kind of acquisition that you're looking at? Like, what metrics does it have to tick? We talked about the ones you're selling, but what about a new one that you go, that meets all of our criteria, we're ready to jump?
Yeah, so there's a few different things we look at. Firstly, comparative advantage. Secondly, the returns we think we can generate in that sector. We have an internal rate of return hurdle after leverage and fees of 12%.
Wow.
So we only look to sectors where we think we can generate that. But then beyond that, we need to know that sector has a good quality lessee book that we can go to. So we like to invest in sectors where there's processing capacity within Australia, because they're generally the people that like to lease assets from us. Sorry.
So over the next 12 months, how much of the agricultural outlook and things like that do you take into account for your own strategy, or is it very much about just ensuring the leases are up to date, there's incremental increase in prices, and the operational side and agricultural side is managed by the managers?
Yeah, it's probably, we're much more of a long-term investor as opposed to sort of switching year on year. And as sort of Tim went through, we look at those long-term fundamentals for the sectors in which we invest. So probably in terms of the outlook, it's very much more of the same. In terms of acquisitions, we don't have the capacity for additional acquisitions. We are, however, obviously completing some of the developments that we have occurring within the portfolio, which, depending on the asset, are a source of an immediate growth or future growth.
Yeah. Now, over the next 12 months, what can investors expect on a news flow front?
So a couple of divestments that we're looking at. And we a few years ago, we sold some high-yielding assets. We redeployed that capital into these development assets. So we still have two significant assets that we're developing. One is a cattle and cropping property where we're developing some additional irrigation land on that. The completion of that development will see additional AFFO flow through to our investors, and the completion of another 690 hectares of macadamias will start to see additional FFO flow. So for us, the focus in the next 12 months is to get these few undeveloped assets developed, and then a couple of small non-core divestments.
Tim and James, thank you so much for joining us today from the Helm, and I really hope you enjoyed that episode, learning so much about Rural Funds Group as much as we did filming it. If you did, be sure to subscribe to our YouTube channels to stay up to date with all market commentary, insights, analysis, and of course exclusive interviews like this one.
Thank you very much.
Thank you very much for having us.